Welcome to the Week Ahead webinar, April 7th, 2024. JB here. Hope everyone's having a great weekend. Going to talk a little bit about the markets, talk about last week, talk about what's coming on this week. We have earnings season, talk about some of the individual names I like coming into this week, as well as some of the names I'll be watching, and go from there. Let's get right into it. Talk about first year to date performance, strong performance so far. We just finished quarter one, and then we just finished up the first week in quarter two. S&P and NASDAQ doing well. The Dow's kind of struggling along with small caps. I'm still waiting for that reversal for small caps where they'll start to be the outperformer. That has not been the case yet. And then the commodity space. The gold's rallying, oil's rallying, crypto's still on a tear. And the US dollar is also stronger. Typically, you would see the reverse as the dollar gets stronger. Gold typically would trade in inverse, would be weaker. That has not been the case so far this year. Even last week, I call it the triple-headed monster, right? The stronger U.S. dollar, rising rates, right? Those are two important components, and then rising oil. Those three things all rose back in the fall when we had the big sell-off. And my worry last week, or at least a little bit of concern, was if we start to see that again, where those three start to rear their heads all in unison to the upside, the market might struggle. So this is going to be a big week. But strong performance so far, which I think bodes well. So when I talked about the Dow, you take a look at last week's performance. The Dow was actually down 2%, while the S&P was down barely 1%. And a lot of that was driven by names like Boeing, Nike, United Healthcare was down nearly 8%, McDonald's down 5%. And then there were some other names to the upside, like Caterpillar. So kind of a mixed bag there, but the bigger moves to the downside offset the gains in some of the other names. So that's why the Dow underperformed. And similar with small caps. Take a look, small caps down nearly 3% last week. And a lot of the small caps names that make up the weighting are in the biotech space, which was down over 3% last week. And then you have SMC, Supermicro, and MSTR, which those stocks have been on monster runs. And because of that, their weighting in the small cap index has shot up to the number one and number two. So when those fall, and they fell 6%, Supermicro sold off 6% last week, and MSTR sold off nearly 16% last week. So that was some of the drag on small caps. So it kind of masks some of the other names that probably have done well. So despite that, small caps were down quite a bit. So next week, it's a huge week for markets. Every week, of course, a huge week. Every monthly CPI data piece that comes out, it's always the biggest one, the most important data. But I really think this Wednesday is going to be really important. We just had a very strong jobs report last week. We've had hotter than expected PC and CPI data the last couple months. If this CPI data comes in hotter than expected, I might get a little more cautious on the market, at least for the short term. We also have the Fed minutes. So both the CPI will be out on Wednesday morning at 8:30, and then you have the Fed minutes will be out at 2 o'clock on Wednesday afternoon. I think the Fed minutes will be I'm not equally important, but we just had the Fed speak last week that caused that big market pullback on Thursday. It just shows how sensitive the market is to what the Fed is going to do. And a couple months ago, and I'll get to the slide, expectation was 2 cuts by June, possibly July, and now that's getting scaled back. And now you have some of the Fed speak out there saying that maybe there's going to be no rate cut this year. I don't think that's going to be the case, but the CPI data could certainly paint a picture that that's a possibility. Also, we have earnings season. There's still plenty of earnings this week, but the Q1 earnings season kicks off on Friday. JP Morgan, Wells Fargo, BlackRock, Citi, who else? State Street. They all report on Friday morning. You also have a name like Tilray. Tilray reports earnings Tuesday morning. That might put a bid in some of the cannabis names, pot names. So that'll be some of the names I'm watching. These names that on here are not names I typically trade too much, besides maybe BlackRock, but BlackRock has been on a tear. So I'll probably just watch those as a proxy for the rest of the market. Bank earnings certainly could set the tone for earnings season. So definitely names to be watching come Friday. But the big picture for next week is that CPI data. So on Friday, we had the hotter than expected jobs report. Based on what happened on Thursday, we had that big sell-off after the Fed speakers came out with some very hawkish comments. Then you also had geopolitical tensions. You had Iran posturing about a retaliatory attack on Israel after Israel attacked their embassy in Syria. So there's that whole backdrop there, but to me, it just showed how sensitive the market is to what the Fed's going to do. And I thought if the jobs report came in hotter than expected, I thought the market was going to fall back further and break under key support levels. It did the reverse, even though it was a huge, great jobs report, more jobs created than expectations. The unemployment rate dipped, and the market just bounced and it recovered some of the gains from Thursday. So to me, I think it's setting the expectation for Wednesday's CPI number, right? I think people are expecting a flat or cooler than expected number on Wednesday. I think that's some of the reason why the market was able to shake off the stronger than expected jobs report. So I think it just adds more focus. Also, when you start taking a look at what's happened to the probability, or at least what the market is pricing in for rate cuts, it's dropped down to a 46% probability that they're going to cut rates at the June meeting, and that's down from 66% only a couple of weeks ago. And now it's a 48% probability of a cut at July's meeting. And sorry for the typo, I hate typos. That drives me nuts. um, so that pretty much means, that at least there's going to be one cut by July, and that 48% probability of a rate cut in July means that has been the probability for a while. That has remained steady. So what has come down is the probability of at least a June cut. And then that probability of two cuts, so not only at the June but the July meeting, is down to 20%, so 1 in 5 chance, and that was at 42% start of March. So obviously the probability of two rate cuts has come down substantially. And then you start looking at folks who the probability that there's going to be no cuts. There's a 30% probability that there's going to be no cuts going to the July meeting. So three more meetings, because it's a May meeting, of no cuts, and a 11% probability of no cuts by that's September meeting. All of that's going to change come Wednesday. So definitely going to be a very big CPI data point on Wednesday. So I'm going to want to be around on Wednesday in the morning to see how that comes out. So in regards to the S&P, I've been talking about this for quite some time. These key support resistance area on the S&P, I've been putting on the SPY. I've been putting on the watch list as well. But if things get dicey, the CPI number comes out hotter than expected on Wednesday. Areas I'd be worried about would be that 512.50 area, which came close last week. Then down, if things get really dicey, 504. That has been almost like a line in the sand. If that breaks, then I'd be worried about a major pullback coming. On the flip side, at 518.40, ironically enough, where did we close on Friday? 518.43. I had that as support resistance last week. It's been up and down in that area on Wednesday. Did it again on Friday. So that's certainly a key spot. And then on the flip side, if the CPI data comes in almost in line or cooler than expectations, I think we can start working our way back into the low to mid 520s on the SPY. And then Friday's earnings might either pad the gains or add to the losses depending on what the CPI data does. So those are areas I'll be watching on the SPY. And these are my support resistance levels. I mean, you can see that that's the 512.50. I still haven't drawn the 518.40 in, but I'll do that if it hits a couple more times. And then the 524.50. If you folks don't know, I use stockcharts.com, and I don't use it because it's the most easiest, but I've used it for, 14 years or 15 years, and I have annotations on there that go back 14, 15 years. So to me, when I look at a chart, the chart is the history lesson on where people bought and where they sold. So these lines, to me, that's why I love support resistance levels and make sure a couple candles hit a support or resistance so you can see where the supply and the demand is. That's why I like using stock charts, because it's like I have all these annotations built up over the years. It's more valuable to me than switching to a different charting service. So anyway, some of these lines have been there for 4 or 5 years, and I'll pull up the chart in a second. I'm not saying people have stop orders in on things or limits in those areas for 5 years, but it just areas of support resistance are really important to me. So we'll see how this all plays out. And this is the longer dated setup, so you can see all my annotations from years back. And I used to circle when it broke above the upper Bollinger Band or broke under the lower Bollinger Band, because I think the Bollinger Bands are a great tool as well and a great indicator to find oversold and overbought areas. And also to find areas that preceded a large breakout, which would be a tight Bollinger Band setup, which I'll get into in a second. Other charts I'm watching, the IWM, the 205 handle was the spot I was watching last week. It breached below that, but then recouped some of it. Little concerning, it hasn't rallied with the market on Friday. But again, the weighting of Supermicro and MSTR kind of distorted a little bit. So maybe that's some of it. But would love to see small caps. If caps start to outperform into the summer, I think that bode well. But it's only a couple weeks away from the sell in May and go away crowd, so we'll have to see how that plays out. And then here's TLT Treasuries. I could pull up the 10-year, and the 10-year, actually it was the 20-year, was up 4.2% last week, but not the yield, the percentage gain in the yield. So I tend to look at TLT more of, it gives me a better snapshot of what yields did last week. And obviously, if TLT goes down, that means yields rose and vice versa. But to me, I guess a little silver lining to what's been going on is that it's sitting here in this nice little channel since the end of January. So if it holds 91.50 or so, 91.40 is where we closed. I think that, and then starts to reverse, I think that bodes well. And you can see back here, and I call it the triple-headed monster. You can see where TLT was all the way into the low 80s. So hopefully find some footing. Similar to U.S. dollar. I actually don't mind the U.S. dollar getting stronger, but I just think TLT, the yields, the dollar, and oil, I don't think it's a good thing if all three of those rise in tandem. So hopefully that doesn't reoccur. And you can see this is back in September. If you pull up all three charts, they all do the same thing. They all go, well, TLT goes down, but the dollar and oil prices soared. All right, so let me get to some of the individual names. And, first I'll get into the one that really drove me nuts. And I did a quick explanation on my rant on Friday. But Spotify, I was talking about the Bollinger Bands just before on the SPY. And this is why I like Bollinger Bands, because not only do they show you resistance, and you can see Spotify riding the upper Bollinger Band here pretty much for the entire year so far. But then it started to get some consolidation, and you have some tug of war. So you have the Bulls and the Bears trying to win, right? And so you can see the Bears won a little bit, then we have some consolidation, and then we get the tight Bollinger Band set up. And typically, and I say this a lot of times, when you have those tight Bollinger Band setups, eventually one side wins. One side gets exhausted, whether it's the sellers or the buyers, and then when that happens, the tug of war, then the other side gets pulled over, and you have this huge breakout. And that's obviously the news that Spotify was raising prices, as well as adding a new subscription tier, is pretty much the catalyst for this move, but I thought it was going to break out anyway. I added some calls right before the move here, as Spotify was showing relative strength compared to the market. The market was weak. Spotify was still strong. I said, wow, I've been waiting to enter Spotify for a move to 290. I got those calls at 35 cents. And then, of course, by the end of the week, the stock hit 313. So those calls almost hit $30. I think at the peak, they were up 7,500%. Just remarkable move. I can't fault myself for closing my calls. The market, we had the jobs report on Friday I was a little concerned about. So I was happy to get out with some nice profits. But it just shows how powerful a tight Bollinger Band breakout can be. Definitely continue to watch Spotify. I thought 300 or so was a target. So if it consolidates again, and then starts to find some support, maybe I'll look to play for upside, but I'm not sure. Maybe it gets to 315, 320. So I don't know if the risk reward there is on the call side, but definitely I'll continue to have that on watch going forward. So that's Spotify. And now let me talk about one of my favorites going into this week and last week. So last Monday, I went and added some DELL calls right at the end of the session. DELL's been a name, and I've been talking about on the watch list for quite some time, that I thought was going to retest its earnings high, which was 131 or so. The AI hype, which is warranted on a lot of these names, right? But a lot of those names that they're warranted on have already soared hundreds of percent, right? But then you have a name like DELL, and DELL has already rallied from the low 50s last year and trading into the hundreds. Then it had its earnings gapped, ran up to 131, but then it had pulled back. But I think it's a name that still kind of flies under the radar, and I think people look at it as just like a hardware company, which it is, but they don't think doesn't have the same potential to be able to have tailwinds that the AI situation is providing for some of the names like Supermicro and NVIDIA, Micron, all these other names. So, I look at it and, trades 1 times revenues. $88 billion in sales, $94 billion market cap. So it trades a little bit more than 1 times revenues. Finally, so the last quarter, they actually had negative growth, but some of the areas that are growing, it was down 14% year over year. but the areas that are growing are offsetting the areas that are declining, and eventually, they have a huge backlog. That's going to reverse. So now their comps are going to be against negative growth. So they're going to post some great growth numbers this year. Also, they're paying down their debt. So back in FY20, they had $37 billion in debt, 3.2 times leverage. Crazy. Now, if you take a look to only 4 years later, they have half that, $15.1 billion in debt. So you look at the number, and if people just look on the top first glance and look at the top of just in 2024 and say, wow, they have $15 billion in debt, but they have to realize that the company has paid down $23 billion in debt in 4 years. Not only that, they're starting to return value via dividends and stock buybacks. They're returning shareholder value. They 90% of their free cash flow has gone back to shareholders over the last 8 quarters. They have and despite everything that's going on, they've had a 12% compounded annual growth rate in their EPS. So even with the revenue decline last quarter on a year-over-year basis, they're still doing well. So I think this is poised to have some FOMO. There's going to be a fear of missing out kind of situation. You already saw some wild swings in the name. It's not typically a name that's volatile, but when it ran up after the big sell-off, well, not the big sell-off, but what day did it sell off? It was, let's see here, if I pull up the chart. Was that when? It wasn't Wednesday. Bear with me 1 second here, folks. Oh, Thursday, right? No, Tuesday. So the stock went all the way down to 115 on Tuesday after I got the calls, bounced back into the 116s, and then the rest is ancient history, right? 115 all the way up to 136 Thursday early afternoon before the pullback, and then another strong session. No catalyst, no upgrade, no update. And I said this on my rants last week. The comical part of it is Barron's is writing a piece saying AI is going to drive Dell's growth, and pretty much citing their earnings from the start of March and saying this is the catalyst for the move. I'm like, wait a second, that happened 4 weeks ago. But anyway, I think it heads to 150 or so. I locked my 130 April strikes in. I'm probably going to kick myself because those are probably going to be $20 in the next 2 weeks. But I did go out and roll out to some May strikes. I think even if it gets to 150, my May strikes will be 5-10 bags at least. And if it really starts to move this coming week, I may look to get some more strikes because I think it may overshoot. Maybe it gets to 170, 180. I've already made some nice profits on it, so I'll just use some of those to scale in there. But I think it's such a interesting story. Take a look at some of the financials. I talked about their debt going down from $37 billion down to $15 billion, the 12% compounded annual growth rate on their EPS. Their free cash flow, that's $5.6 billion in free cash flow. I think there was a slide, I have to go look. They've returned like $1 billion in dividends just in the last 8 quarters. So and they have a buyback program. So they're taking out outstanding share count, which is going to lower their market cap and enhance shareholder value, things like that. And also, so the last little piece, and I posted this on FinTwit, but then you have comments from the NVIDIA CEO at the NVIDIA GTC conference back in March, talking about, nobody is better at building end-to-end systems of very large scale for the enterprise than Dell. From a $2.2 trillion company, pretty much saying, this is our go-to, this is the brand, right? And then the Dell released a press release after the GTC, after he came out with those comments in the evening. Another quote from him, pretty much saying, together, NVIDIA and Dell are helping enterprises create AI factories, turn their proprietary data into powerful insights. Again, I think it just bodes well. Another little snippet I put on Twitter, they had $2 billion in backlog, and I'm trying to find data. Barron's posted an article, they said it was only $800 million, and now it's up to $2.9 billion. I saw on their second quarter, it said $2 billion, and now on their fourth quarter, they have a $2.9 billion backlog, and that's up 40% sequentially. Just crazy stuff. So I think it just bodes well. Do I have another slide here? Yeah, and you take a look at the market, $152 billion total addressable market. That's from 2027. And then you look at the chart. Again, I talked about Spotify with the tight Bollinger Bands, and you see it twice here with Dell. You see consolidation. I mean, it's melting higher, but slow, steady. Then their earnings, tight Bollinger Band, breakout up to 131. Consolidation. Then you see the tight Bollinger Bands again, boom, to the upside. I think the chart's going to keep going to the upside over the next couple weeks. So really love Dell heading into next week. I think it tests the 40s, but you can see how it's traded. If you watched it last week, it's going to remain volatile. So maybe it drops under 130 for a bit, bounces 137, bounces down to 133, then finally over 140. But definitely a name I like heading into next week. So that's Dell. SE Limited, and I think when I talked about on my rant last week, I called it SEC Unlimited. Hopefully those are the profits on the calls when this, if it rallies next week. But great setup here. It was looking really good on Thursday when I added strikes up over 56, then gave most of it back into the close with the rest of the market. And then another strong day yesterday. It closed at, not yesterday, excuse me, Friday. Closed at 55.28 and some huge volume at the end of the day. I think the last 5 minutes, it shot up from 54.80 to 55.20 or so, and massive volume. I think that bodes well, and I'm not going to get in a rant about the fundamentals and the details of exactly what the company does, their growth, and all the minute details. But I will just say, I hate to use analogies of different companies, but to me, this is SE is the Baidu of Southeast Asia, but early stages. I'm talking 2008 Baidu, 2009 Baidu, not 2023, 2024 Baidu. Although I think Baidu is poised to do better in the coming years, but Baidu went from $100 to 1,000, did a split, then up to 200. So if you look at Baidu now, it's $100 and something stock, but in the perspective of the split, it's $1,000 stock. That's what it did back in 2007, 2008. I don't know if they split twice. But either way, love this. I think it heads to 60. I'm not going to add any more strikes just yet, but just a great setup. And you also look here, you have the 50-day crossing over to 200, which is a golden cross. That happened back at the end of March. I think it's a great setup here, and I think it heads up to 60, hopefully next week. So that's SE. Nano X Imaging. I did my rant last week, so if you go on the site, you can click some of the rants. I think Wednesday I talked about it. Really like this setup, high short interest. The name, they finally got FDA approval in February. This is a name that plays into AI, sort of. They have software that's able to add more color to analyze MRIs and things like that, especially when it comes to livers and liver scans. It's going to aid physicians to find things that they may have missed. I think it's a great platform. It's been approved, and it's going to take a while to roll out. So it's further along than it used to be, and also you have the backdrop of that NVIDIA stake. NVIDIA owns about $400,000 worth of NNOX, and a lot of it's because NNOX acquired a company that NVIDIA had a stake in. So it's not like NVIDIA went and bought NNOX, but they still have the stake. And ironically enough, NNOX is in the AI space. So I'm not saying NVIDIA's going to buy them, but I think it just adds more check marks to the bullish story. So I think this heads to $15. Just going to need a little kick in the butt, maybe the analyst upgrade, or even the start of some kind of short squeeze. But love this one heading to next week as well. Still holding April, May strikes. Intuitive Surgical added some calls on Friday. Almost had them at a double to close some out to cover cost, and then it reversed course in the afternoon, hit 394, and then within a matter of 30 minutes went from 394 to 389, and then my calls went from nearly a double to just up 30% or so. So my plan is not to lock the calls in for 30%. My plan is that I think it's heading into the 400s, 405s, maybe 410. This coming week, you had the news that Johnson & Johnson is acquiring Shockwave, SWAV, for $13 billion. That was already out there. Wall Street Journal reported that rumor a couple weeks ago. But to me, it just adds more premium to the sector. And Intuitive Surgical will come off its highs, $400. Even though it was upgraded by Citi on Wednesday, the stock still sold off. I think it's just some churn here. It's right at the 50-day moving average, 386.88. I really think this takes off over $400 next week, especially as the market starts to reprice it based on that acquisition. So I like Intuitive Surgical. I also like EW, Edwards Science, is another medtech name. Never traded that one before. That one's up 1.6% on Friday. That has a tight Bollinger Band setup, so could be a name I add some spec calls on heading into next week. Well, at some point next week. So that's Intuitive Surgical. Talk quick about the pot space, and ACB up 54% last week, CGC up 17%. You wouldn't know it a little bit on ACB because the stock closed down in the last two sessions, but just a monster run, and that's on the heels of it's up 111% over the last 3 weeks. Same with CGC. It's been volatile, and I've said it on the watch list on my rants over the last week or so that these names, they can be down 10% in the morning and be up 30% in the afternoon. That's just how they've traded. I think it was Wednesday or Thursday. ACB was $6, and then within 30 minutes, it rose 30% up to 780 or something like that. A 31% 30-minute intraday reversal. Just kind of just that's exactly what's been happening with these names. And I think it's going to continue. Eventually, they'll become less volatile, but I think when that happens, the stocks will be much higher than they are now. Take a look at a chart on ACB. I think it heads at least to double digits. So last week it tested 9 on Thursday before reversing. Then you had the little sell-off there on Friday, down 6%. Strong volume as well. So it's all good signs. That's churning volume, right? And it's kind of held its ground. So if we're churning sellers, once the buyers, if the buyers keep coming and the sellers are gone, this heads higher. So really like ACB over the next couple of weeks. Locked a lot of my 7 calls in, one of them for 1,000%. I'll continue to hold those, and I might look for some other strikes on strength next week. And you also have CGC. Again, similar. It almost looks less volatile than ACB now after that big move on Wednesday. But you look, it's holding its ground after the huge move. It's just a good sign. On strong volume, that's turning volume. I think this heads, I say 17, 18. But if it gets to 17, 18 short term, it probably heads higher longer term. But there's going to be a lot of chop. Maybe it gets 17, 18 back to 14, then up to 16. So it's going to be a tough one to hold, and that's why, for me, I tend to lock some of the profits in, so I'm riding free with plenty of profits, takes the emotion out, and then you're able to ride it into the sunset when it's many, many bags. So that's CGC, that's ACB. The other name that I've been trying to, well, not trying, but I add some strikes on, it's just been frustrating after its pullback last week, is IIPR, and I keep saying this. I think some of the reason it's sold off from its highs is it's being piled in with the rest of the REITs, which have been getting, I wouldn't say getting killed lately, but they've been under pressure. So good sign here. It's finally found some footing. It's the premier sole real estate play for cannabis in the cannabis space, period. Right? That's what IIPR is. They have a phenomenal a team that ran and sold a REIT before they started this IIPR rate. So they have a history of success, a great proven track record. That's why when you see me talk about this name, I think it's a phenomenal play, and it's only going to get better. Florida's going to put the cannabis vote on their ballot in November. These stocks don't trade for today. They trade in the future, and I think some of these names are going to start to price that in. IIPR is going to continue to have demand to provide real estate space for folks. I think it just bodes well. So at some point, I'll look to add more strikes. Still have the Aprils, still have some time on those. But once they get closer to expiry, I'll probably look to add some May strikes. But I think it heads to 110 in the coming week or two. And then Riley. And I don't want to talk too much about Riley. Why is this not up here? Oh, it's my last slide. That's why. Sorry, folks. Let's see if I can get that in. Probably can't. Well, this is half the chart, folks. My apologies. But I'm not going to talk too much about this because, number one, there's I called it the circle jerk, but there's a huge amount of bearish folks, a team, a concerted effort of folks, and they're not the nicest people. They'll send defamation letters, they'll threaten, they'll do whatever they have to do to get this stock to zero, lie, whatever it is. So I don't want to say anything that's going to cause me or me and my family any hardship or concern. I just see it as a possible opportunity for a squeeze. 76% of the float is sold short. The longer it hangs here, and you can see it's hanging here. How many days in a row now? 6, 7 days to the upside. Longer it stays here, and if it breaks that 25 handle, I think it's off to the races. So I added just some speculative strikes. That's all I'll add. I call it the hero or zero play. The issue right now is Riley has to file a 10K that has not been filed. They got a delisting notice from the Nasdaq. Supposedly that's been all rectified, but they have to get the filing out by the end of the month, April 30th. If it comes out clean, I mean, no doubt its stock's gonna be much higher than it is now. Comes out with some issues, maybe it sells off a little bit. The bears are saying that's the biggest. It's gonna go belly up. It's gonna be bankrupt. They have all these loans that are garbage now. I don't even read this stuff because it seems like a lot of it's conjecture or BS. I saw someone posted the other day about we use the everybody talks about the Freedom of Information Act where they can request documents and things because it's a publicly traded company, right? Everything should be somewhat transparent, but mostly transparent. If not, then it's fraud. But they haven't filed, so it leaves an opening for the bears to kind of create the fear, uncertainty, and doubt because we're waiting on a filing. But some of the bears are saying, "Oh, we used the Freedom of Information Act to get all this stuff," and then someone said, "Well, let's see the document," and then they say, "Oh, what's your problem? I'm going to block you," and they block the guy. And this is a guy, his Twitter handle or his X handle says FOIA expert or something. So he's going to get the FOIA request for the documents. Funny stuff. Anyway, I don't want to get too much into it. Last but not least, the GLP-1 names. I'm hoping tonight, Sunday night, Monday morning, there's some M&A, even if it's not in the NASH space or the GLP-1 space, maybe a biospace. The biospace needs a kick in the butt. Just waiting for one of the big pharma names with plenty of cash on hand to do some kind of M&A. And I'm hoping the GLP-1 space. Didn't talk about any of those names, but still love Turn, which, I mean, it's in the fives. I can't wrap my head around that one. It's just these early stage GLP-1 names that won't have a drug out for many, many years. It's very easy for folks to either lose confidence, for shorts to come in, or for sellers to sell, right? And because it's all speculation. You're just speculating on data. You're speculating that phase 3 data. You're speculating that they're going to get FDA approval, and you're speculating they're going to have a sales team to roll it. So there's so many steps in it that these early stage bio names, they require patience. I mean, VKTX was $7-8 for a while. I was bullish. I've been playing calls on VKTX for 5 years, I think, and then finally to see it one day do what it did. I'm hoping the case GPCR, Altimmune, ALT, and Turn. Those are some of the names I like, and the VKTX. So next week ahead, I'll probably talk more about those. Hopefully, I'll be talking about buyouts in the space. And that's it, folks. Thanks for listening. Let's have a great week. Rock and roll.